Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the General Manager of HomeGain. A quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions or concerns, whether, like I said, it's regards to getting your credit fixed to purchase a home, obtaining a home loan, or trying to navigate the options, you're in a distressed situation, you're not able to make your mortgage payments, you've been fighting with the bank month after month to try to get your loan modified and have been unsuccessful and want to know, where to turn and, what the options are. That's what we're here for. The phone number is 877-245-2030. That's 877-245-2030. Distress situations are tough because you want to bury your head in the sand and not deal with the issue. But, I've seen many people take that approach, and it doesn't end well. It ends typically in foreclosure and, with collection agencies coming after 10 years down the road for the deficiency balance versus potentially short-selling your house and working with the bank to try to come up with an arrangement that is both beneficial to you and the bank and can get you back on the fast track to homeownership within the next 2 to 3 years instead of having to wait potentially 4 to 7 to 8 years. So reach out to us, whether it's the phone number at 877-245-2030 or via the web at realestate360live.com. On the right-hand side, there's an Ask a Question button, so make sure you use that. Louis, I had a couple emails last week from listeners. One of the ones was, I hear you guys talk a lot about current events and a lot of political things that are going on, and, is that really relevant to real estate? And I wanted to answer that because I feel like it's important that, people understand that everything that takes place economically, politically, it's going to have a major impact on real estate. Why we cover what the Fed's doing so much is because it ties into mortgage interest rates, which ties directly into people buying homes. I mean, obviously we know the lower interest rates that there are, the more people there's going to be more of a demand for people to buy homes versus as interest rates rise, there's going to be less demand for that. So I think it's critical that, the show is here, yes, to answer your questions in regard to anything with real estate, but it's also to educate on what's going on in the market right now and how that could affect the decision that you could be making right now, 6 months from now, a year from now, 2 years from now. And to not pay attention to these things, the fiscal cliff and what the Fed's doing with the money printing and how that can lead to inflation is not smart.
And Ryan, I would add, things when we talk about going to college, unemployment rates, estate tax, things going on in Europe, again, they all have an impact on the housing market. If students take on student debt and they can't get a job and they have too many student loans that they can't afford a mortgage, that's going to impact the housing market. Things that go on Europe impact what the Fed is going to do, where interest rates are going to go. So you're right. I mean, we're justifying to each other, but what goes on in the economy in general has a major impact on the housing market. And what's interesting is all of these issues are discussed a lot by politicians and a lot in the media, but they don't really talk a lot about the real estate market as such.
Yeah,
so
absolutely.
These are all the things that impact the real estate market. So we talk about them and try to put them in a confine so it's relevant to what's going on in the real estate market.
And this is a prime example. So I just pulled up earlier this morning. The House passes H.R. 1629, immigration legislation. Now, if you just look at that for face value, okay, who cares about that? This is another something they've passed. Well, when you read further in there, one of the things that's said is that now they're trying to find a way to pay for this bill. Okay, well, where's the first place that they went? They're looking to add another guaranteed fee to Fannie Mae and Freddie Mac to cover the program. Okay, so if they're going to, this is what they call a G fee. So what that typically means is it's an additional fee that gets added on to interest rates that's passed down to the secondary markets. So what does that do? That makes, borrowing more expensive for you, the consumer. Now, every day they're passing more and more of these, and the fact of the matter is they don't have the money to cover any of these things. The one thing that they do know is that interest rates are low right now, so they can continue to try to slip these fees in there to make it look like nothing's happening. But more and more, they've been turning to Fannie Mae and Freddie Mac as a way to disguise their terrible spending habits.
Right. And, Ron, if you look at the fiscal cliff story, it's been kind of hidden, but one of the ways they might try to, quote, reduce the deficit is by eliminating the mortgage interest deduction. You don't hear that much about it, but, again, these fiscal cliff discussions could have a major impact on real estate directly and indirectly.
Absolutely. And, I think that it's critical, when you're looking at, especially if you're an investor or just somebody looking to buy your first home, what the long-term implications of this stuff are. If you're buying a home just merely for the fact that you want to be able to get that tax write-off, it may not be there 3 years from now. So it's critical that you look not just at one or two things, but what can happen down the road that could potentially change. Obviously, we talk week in and week out that we feel that being able to obtain a low fixed rate mortgage to protect yourself from all the things that are going on in the economy, the fiscal cliff, the printing of money, which could inevitably lead to long-term, inflation. If you lock in yourself at sub 4% interest rates, Freddie Mac just did their next survey again, which basically have now shown that interest rates have been 12 consecutive months below 4%. That is phenomenal. Like I said, every time that I say these interest rates, I feel like they're fake. Like maybe it would be like a CD rate from 15 years ago or something like that. Not a mortgage, not your largest pretty much debt that you ever take on. And for you to have the chance right now. Now, granted, it's incredibly difficult to get a mortgage these days, but what you can do is start to be setting yourself up to put yourself in a position to get one, because I've stated numerous times, I feel like, yes, interest rates are low. I don't feel like they're going to necessarily rise, all of a sudden because the Federal Reserve is manipulating the interest rate market. They're buying, billions of mortgage-backed securities, which is keeping interest rates low. So I feel like, if they start to go higher, the Fed will just step in and start to buy more to keep them pushed down. But it is probably critical that, if you're not in a position today, but you're thinking of getting and buying a home in the next 6 months to a year or 2 years, that you start to, set yourself up to be able to obtain that home loan and go through the rigorous underwriting standards that are out there today. The lower interest rates go, the more rigorous the underwriting standards are getting. And I don't feel like that's going to change. Louis, you and I have talked, ad nauseum about the banks really don't want to lend at these interest rates, so they're trying to make it incredibly difficult for people to actually take out home loans. And I feel like that trend is going to continue. It's going to continue for the foreseeable future. They only want to lend to the cream of the crop. Now, that doesn't rule you out. Let's say you have a 620 credit score right now and you feel like, okay, well, they've turned me down. This is the end of the road. It's not, because typically it's probably something that's on your credit, or it's maybe that you were working with somebody that didn't tell you that you can't have large deposits on your bank statements. It's important that somebody tells you, okay, this is why this happened, and this is what you can potentially do to correct it. That starts with working with, local professionals. All the time I hear of people working with mortgage lenders. Like, let's just say that somebody's trying to buy a house in the D.C. metro area, and they're working with a lender that's out in California. Okay, well, that could be a bit of a problem because they don't necessarily understand the area as well as maybe a local lender does. So if it comes down to an appraisal and there's some sort of issue on the appraisal and it's a California lender, they don't really care, versus if it's somebody here locally, they probably have a better pulse on the market. So all in all, I think it's just critical that, it's great to be out looking at what's going on in the national media and trying to get an overview of what's happening throughout the country. But it's really important to work with the local professional and others that know what's going on in the local markets, because I really focus my attention on the DC metro area, but I still know what's going on in the rest of the country. But if you wanted to really nail down into certain subdivisions or areas, we can get you the info and the intel that you need to make an educated real estate decision, whether that's trying to obtain a home loan in today's market and who the credible lenders are out there, trying to find a real estate agent that really knows your subdivision, knows the comparables that can maximize the amount of profit that you make on your home sale. That's what we can do. It's 877-245-2030. That's 877-245-2030. So in that Freddie Mac survey, the primary mortgage market survey from November 29th showed that the 30-year fixed-rate mortgage rate climbed to 3.32% on average as compared to 3.31%. Darn, right, Lewis? I mean, 3.32 and 3.31 is just phenomenal. I mean, I can't even believe that they're there, to be honest. Every time I look at them, I'm like, what's going on here? And obviously, we know in normal market conditions, these interest rates would probably be at least, 6.5%? I would say, at this point in time. What do you think, Lewis?
Well, it's hard to say because we've been living in this artificial environment for so long, but clearly they'd be higher.
Yeah, I mean, much higher. I would guess. And with them being 12 consecutive months below 4%, I would say that next year we're probably going to see the same. So I don't really anticipate them going over 4%, just because of the manipulation. So if you're worried that if you don't get it in the next couple months, that you're going to miss out. I'm not saying that it's not a possibility that could happen, because it could happen. But what we are seeing in the D.C. metro area, especially, and this is probably, I would imagine, out in the West Coast as well, is the longer that we have low interest rates, the higher that the prices of homes are going. And in the D.C. metro area, every day I'm talking to people on the ground here, buyers that are getting very, very frustrated that they can't get the home they want because there's 10 and 15 contracts coming in. And, low interest rate environment lends itself to that, especially when we have pretty much a shortage of supply all over the D.C. metro area. Now, granted, if you listen to the national media, they're going to say that there's many foreclosures and there's oversupply in some areas, but that's not what's taking place here. And I think that it's understand that you better set your expectations when you're going to a home purchase. We're coming up on a break, guys. When we come back, we're going to have this week's credit tips on in dispute status and what you can do to make sure that your loan gets approved. Stay right there when we come back.